Ladies and gentlemen, I am speaking to Abubakar Hassan, who is Director of Market Oversight at the Capital Markets Authority. Let me tell you, if this is the first video you're watching, you need to go back to the beginning. I have learned so much, and I'm in the industry. So this has been very eye-opening around the role of the CMA and what they have actually done, what struggles they have gone through, and what they have done to protect investor interests. So I have two final questions, which I will be using, taking this time to ask. And the first question is, what can you tell the public that you have done for them in as far as protecting their interests, like generally?
Okay. All right. So let me just say, what does Directorate of Oversight do, first of all?
Who's the Directorate of Oversight?
I'm the Director of Market Oversight.
Okay.
So that directorate
that
is
office.
under me. Yes, that office is under me. So how do we regulate the market? People need to know that. We do it under triology model. Yeah, there are three methods with different methodologies. The first method is authorization. Anyone who wants to come to the market needs to be authorized. Okay? How to methodology? You can either be licensed, you can either be approved, you can have, those are methodologies under that method.
Okay.
Once you get into the market,
authorization.
Once you get into the market, you are supervised on a continuous basis. Okay? Once, if there is a problem, it can be sorted with a remedial action. If the problem is beyond supervision capacity, there is an investigation and enforcement function to investigate it and punish you. So it's a three methodology.
Okay.
Authorization, supervision, and enforcement.
Okay.
So people who are being authorized first there are people who come in as licensed entities. For example, stockbrokers, fund managers, investment banks. These are licensed. Once they get licensed, they are being supervised on a risk-based supervision approach, on merit-based, because we continuously inspect them. Okay, we risk analyze them, we risk profile them, and then we inspect them to make sure the investors are protected, the entity they are dealing with is safe and sound. Okay, and if there's a problem, there is a dispute resolution mechanism under investigation and enforcement where the authority takes action on the regulated people. That's one way of a licensed entity. But the other people can come not as a licensed entity, but as offerers. For example, Safaricom. Safaricom is regulated by CAK. Yeah? But it's only one activity on the offering of shares to the public is the one which is being approved. So it's not licensed, it's approved. So this person is not subjected to supervision the way a licensed entity. We don't inspect Safaricom. Okay, we don't, you understand? But whenever there's an issue, then now we come in for enforcement. All right?
So if argument's sake, there was a huge issue.
Yes.
It's not going to happen, not happening, it's just hypothetical.
Yes.
And Safaricom was not able to pay suppliers.
Yes.
And Safaricom can't meet their obligations month on month.
Yes.
And they're in trouble.
Yes.
Hypothetical. Does the CMA have a role to play there?
No, we don't protect suppliers. We
not just suppliers, but the shareholder.
Yeah, from an investor's point of view. So that offering is under supervision. That offering, the trading of the shares of Safaricom, they are being surveilled. So what we were looking there is whether there's market manipulation, insider trading, as far as the shares are concerned. The product which came into that one is continuously surveilled. However, if there is an issue, now you're talking, if there are governance issues and all other issues, now it will go straight to, it's an ex post thing. It's not a continuous, they are not subject to a continuous inspection. For example, a bank, or any banks, they come and raise capital. Yeah, the person who continuously inspects them is central bank. Yeah, they are licensed by central bank. But that offering part, it comes to CMA. All right, so that shares part, it comes to CMA, and then a CMA continuously looked at the trading of those shares. But if there's an issue, for example, NBK, we intervene on embezzlement of investors' funds, then at that time we come ex post. We are not there on a day-to-day, as far as offerers is concerned. But as far as licensed entities is concerned, we are there on a day continuously.
Okay.
Okay? So what we can boast, for the last 3 years or 5 years, before COVID, 3 years, we have recovered, not financial penalty, recovery. That means ill-gotten gains from the people who are bad people. Over 1 billion Kenyan shilling. No regulator, just name it, no financial regulator has recovered 1 billion Kenyan shilling. You can
When
do
you say
your
recovered, like, give me an example.
if people have conducted themselves, they have misconducted themselves, and then they have gotten money from investors in a way ill-gotten, yeah? 1 billion has been recovered. Okay? That one, we are at the march of EACC. In fact, it is EACC, CMA.
Wow.
For the last 3 years, there's no financial regulator who has disqualified over 20 big boys. You know, one of our enforcement agenda is we are bold. No financial regulator have you seen disqualifying any. Even these banks, you've seen them. I don't want to talk more, but have you seen a regulator disqualifying a director of what the people they are licensed? CMA has disqualified over 20 boys you don't want to touch, feared. So we, as a regulator, we protect people, we continue to protect, and we will always protect, but within our jurisdictional ambit. And the extent of protection will vary because of the law and the activities which are cross-jurisdictional.
Okay. Wow.
Yeah.
Thank you. So finally, when we started, you talked about the fact that there's been enforcement action you have tried to take, but it's gone to court, it's gone to a tribunal, it's gone to Supreme Court, it's gone to, so there's judiciary, and then there's the regulatory role that you have. And there seems to be, some kind of, lack of moving in unity per se, because you're totally different institutions, totally independent, and issuers can take advantage of that independence by going to one party to report to the other party to stop you from doing what you should be doing. So the question I have is, what do you think needs to happen from a policy level in Kenya to enable the capital markets to function effectively, where people are able to raise money easily? We have a regulatory environment that is enabling as opposed to not enabling, and a regulator that is able to actually execute on its mandate and its role. Yeah.
Good question, Rina. Okay. Ideally, there must be, this is how it goes. There must be some issues, strategic issues that what you're raising. And then there must be a government or government agency must come up with a cohesive policy document with a policy objective that you want to achieve. This policy objective leads to development of the law and regulatory framework. Yeah? And then this law and regulation needs to be effectively enforced so that the regulatory outcome meets the policy objective. Okay? So there must be an issue, there must be the policy or the policy direction of a country or of a government agency. This is where we're going. This policy objective needs to be, can only be operationalized through a law. That's where a law is designed, okay, to meet the policy objective. That law needs to be enforced. When it is effectively enforced, the outcome of the regulation will meet the policy objective, and everything will be functional if that was the policy objective. So in this whole scenario, there are 4 issues which we need to discuss,
okay,
either at the policy level and regulatory level, so that when we enforce, it meets the policy objective. 1, should the regulator regulate private offers? Are there advantages and disadvantages? Because that means private offers will be subject to regulatory scrutiny, regulatory transparency. There's a cost, time for them to go to the market. All that needs to be taken into advantage. If yes, then nobody will have to raise capital without the regulatory approval. Okay, that's the first thing.
Okay.
The second thing is, whether it is public or private, what is the approach in which the regulator is regulating that offering? Should it be a disclosure-based approach or a merit-based approach? Should the regulator confirm the accuracy of the information and then tell people this is appropriate for investment, this is suitable for investment, causing the moral hazard? Or should the regulator just stick to what is in the law now and says you have to disclose this about yourself, and then the investor evaluate the merit and risk, make investment decision, of course guided by the investment advisors who are licensed. And right now, even the analysts are licensed by ICIFA, so that they can help an investor to make that investment. That is, we need to have a conversation whether it should be merit-based or disclosure-based. 3 is this investor remedies. If something goes wrong, if you are disclosure-based and something goes wrong, the recourse, the investor remedies and reliefs. We're saying we have retributive justice, we have restorative justice, and it's done either criminally, civilly, or through administrative sanctions. We disqualify people, we disgorge, we penalize people. You see, there are a range of sanctions available if something happens to an investor.
Okay.
Are these remedies adequate? Do we need to strengthen them? Because there is criminal. If you do a wrong prospectus, you need to be jailed 7 years, 10 million fine. Is that enough? Okay. There is this civil, you need to be compensated. Administratively, the people who gave the information, they can be disqualified, can be penalized, you see, all that. Is that enough or needs to be strengthened? And the fourth one is that with those remedies, enforceability of those remedies is not a function of a regulator alone. It is a function of many variables. It's like, you remember that thing we do in school, this function of, it is CMA plus others for that equation to be. And the first person, it's who is a function, CMA plus judiciary. Okay? Yeah. CMA plus other regulatory agencies. Yeah. For example, in Imperial Bank, we have said money to be refunded. The money is with another sister regulator. What happens there? Do you want CMA to sue the sister regulator? Or what happens there? So we need to have a conversation on an enforcement on another regulatory agency. 2 is people move to court. And when they move to court, first they have automatic stay, if it's at the tribunal. They go to court, they get ex parte orders. Ex parte orders mean they have just gone alone, they have not been heard, they just get a stay order. That part, we need to have a conversation that CMA actions cannot be automatically stayed. And that can be as a matter of law, that if you go to court, you cannot get an automatic stay. Ex parte, you need to call CMA, you argue it out before the court gives an order. At the tribunal, you cannot just file and get an automatic stay without even appearing. And as CMA, we have made proposals to Parliament. I think in this Finance Act, that thing is being restructured, the tribunal part. You cannot just access that one. There's no finality to enforcement action. 2 is, even if you go to court and you go to the tribunal, there must be a time frame under which these matters needs to be finalized. Yeah. Maybe 2 months, 3 months. Maybe now we need to have a conversation, or maybe we need a specialized court just to handle financial matters in the country. Otherwise, you take it there, it takes forever.
And the judges are not equipped to handle them.
Yeah, I believe so. Thirdly, on the judiciary, there's the entry part where they give stay orders without. 2 is the time it takes. And 3rd is if they make decision purely on technicality. Purely. I don't know how to say it. Of course, the merit is that these people have done something wrong. But they will just pick a technicality and then quash our decision and even award cost against CMA. I'll give an example. The National Bank of Kenya. You've heard about there was a 1 billion fraud.
Yes.
We got someone, money went to his account.
Yes.
Yeah.
I saw that.
Then this person was disqualified and penalized around 100 million. And he's going to court. He has won on a technicality. And then CMA is asked to pay him. I mean, surely even a judge will just say, and I don't want to, there's an independence of judicial, but you just say, okay, quash, there's a technicality, start again or something. You even award costs that person needs to be paid. And everybody knows he has stolen money. And we have a finding there that we have found money into, but in the process, maybe we are human beings, imperfection here and there. Maybe we did not give him one document or what, just a technical issue, and everything is quashed. Look at insider trading. We recovered over 500 million Kenyan shilling from those insider traders. They went to court. The court just dismissed all the whatever they are saying, yeah? Because there is nothing. We have done the right thing. And then a court picks a technicality that CMA, when you are delegated, because on insider trading, we delegated our enforcement. And we had put 4 board members and 4 independent people. Okay. They are not board members, to hear the case which disqualified those people. The court said 4-4, that's not fair. So how do you execute your mandate now? Do you want us to give the enforcement action to different people? To different people now, how will the regulator take responsibility?
So the question then, following what you've just said, I'm just like, what? Then who is responsible to then get these things cleared?
I think
all these 4 areas.
I think Parliament will help us in coming
so
up with...
you make an appeal, write to Parliament, get somebody to sponsor a bill?
Yes, on those 4 structural issues for this thing to be effective, functional and efficient. Yeah. Otherwise, our actions are subject to other people's interventions.
Okay.
Yeah.
That's very clear.
Thank you.
This conversation that we have had has been very insightful on many levels. I think conclusion is, if you're an issuer, I think it has been comforting to know that we can actually approach the Capital Markets Authority, have conversations around ideas and innovations that we have, and together work on how to get those ideas to come to being by either forming regulation or working with existing regulation and getting exemptions, or just getting some sort of a transition period to be able to make something functional within the law. So that's been encouraging. We don't have an enforcement authority that has a hammer and is ready to strike. It's, can we find a collaborative way to work? From an investor perspective, I think it's very clear that we have to take responsibility as investors to do due diligence, to sit down, analyze, think through, process. What is this information that has been presented to me? What does it mean? What are the risks? And am I willing and able to take those risks? Do they make sense for me? And then make an informed decision, as well as also consult with investment advisors, stockbrokers, financial analysts, who we can sit with, understand what I'm getting into, and then make an informed decision. Understanding the role of the CMA and the other players in the market, whether that's the Insurance Regulatory Authority, the Capital Markets Authority. We also have the Retirement Benefits Authority. We have the Central Bank. There's all these different financial regulators that play a certain role. And we can't sort of just say, it's been checked by them, I can invest, or it hasn't been checked, I should not invest. You might miss out on a good opportunity because it's unregulated, but we have to take responsibility ourselves as investors to make those decisions ourselves. But due diligence is something we can't avoid. Greed and laziness is not something that we should ever be comfortable with. We must take time and make the effort to find out the information for ourselves. I think, Abubakar, I just want to say a big thank you for being authentic. Thank you for sharing openly. Thank you for just the opportunity and the time that you have given me to sit with you and just understand some of these pertinent issues that affect so many investors. I think if there's anybody out there who has an issue, it's important for them to know that you can go onto the website and complain about it. You can write to the CMA, you can write an email. And the website is www.cma.or.ke. And you can whistleblow, you can complain, you can ask questions, you can see what information is available for you out there, so that as you make investment decisions, they are informed, and then you can grow your wealth well. In
fact, on the whistleblowing, we have gone a step ahead by incentivizing whistleblowing. That means if you whistleblow, you'll be paid. You see that we've gone a step higher. So that if you see something wrong there, please let us know. And if there is money, ill-gotten money, once it's recovered, you'll get something. So that it can incentivize you to whistleblow.
Okay. Thank you so much for watching. Please subscribe. Subscribe to this channel. Share these videos. People need to know what's happening. People need to understand what the situation is. So please share these videos. Share them on your WhatsApp group. Share on your social media pages, and let everybody know what the truth is. Take care and have a wonderful time wherever you are. God bless.